So let's start with options. There are ways that they can be done wisely. However, they are also extremely tricky, even dangerous financially, if you aren't an expert and you aren't able to devote a considerable amount of time and attention to managing them correctly. Good morning, and welcome to Life in the Markets. I'm Stephen Rohr, Wealth Manager here at the Life Financial Group, and hope you had a lovely weekend. Last week was largely a down week in the market. Almost all the major indexes were down by the end of the week. The S&P 500 was down negative 1.55%. The equal weight S&P was down negative 0.43%. The NASDAQ was down a little over 4%. The Russell 2000 was down less at negative 0.77%. The International was down 0.96%. Gold and silver were also down. So gold was down another 2.26%, which makes it down almost 7% year to date. Silver was down also, and down about 23% year to date, which as opposed to the different indexes, which are still up significantly year to date. So the equal weight S&P, for instance, is up 11.39% year to date. The NASDAQ, despite, rather a bad week, is still up almost 18% year to date. And the Russell 2000 is still doing phenomenally this year, a little over 19% year to date. Good year, just a down week. Unfortunately, oil was back up again, up over 14%. Again, resumed tensions and continuing conflict there in the Strait of Hormuz has caused the prices to rise again. That has been the story for months now. While the market was a bit down this week, we actually had good news in the economy. Initial jobless claims were lower than expected, coming in at 208,000 instead of 218,000 that was expected. Other reports from manufacturing and retail show steady progress as well. For instance, the Empire State Manufacturing Index arrived at a very strong 15.6%, as opposed to the 8.4% that was forecasted. This is a less common index to reference, so as a reminder, the Empire State Manufacturing Index is put out by the Federal Reserve Bank of New York. They reach out to 200 manufacturing executives and basically poll them on whether they think their business or general business conditions in their industry are improving or deteriorating at this point. And the index number reflects the over-under of, are there more executives who are positive and hopeful, or are there more executives who are dour and looking at clouds on the horizon? So a positive number, so a number more than zero, means that more executives think things are going in the right direction and their business conditions are improving. A negative number less than zero, on the other hand, means more executives think things are going badly and there are storm clouds on the horizon. All that to say, 15.6, that much above zero, as opposed to the forecast at 8.4, is splendid news. The Consumer Price Index was down negative 0.4%. This was even better than the expected negative 0.2%. This is inflation, so we want it to go down. And this was helped, of course, by lower fuel prices over the month of June. However, the core CPI, so this is excluding food and fuel, it was flat for June and only up 2.6% year over year for June. This is much better than the expected 2.9%. Similarly, the Producer Price Index was down negative 0.3%. Instead of the forecasted flat. Again, this is also good. And if you exclude food and fuel for the core PPI, it was only up 0.2% instead of 0.3%. Now, the Producer Price Index, which again is not referenced quite as much as the CPI, the Consumer Price Index. It's very important, especially right now, because it measures inflation at the point where the manufacturers sell their goods to the distributors. So it's more upstream from the prices that we see in the store. Now, when dealing with the lagging effects of oil prices, as we've been talking about for months now, most of this year really, the PPI, the Producer Price Index, gives a good idea of what the inflation picture will look like in a month or two. So it kind of gives an idea of what we might be seeing coming ahead. Consequently, for this PPI to be lower than expected, as well as the CPI to be lower than expected, this is a very hopeful direction for the future. Now, the combination of these two bodes very well for the Fed to at least hold rates steady and not raise them. The fundamentals of the economy continue to look good, and that is more important than the minor fluctuations in the market at the end of the week, whether that's up or down. Now, speaking of fluctuation in the indexes, David Bahnsen of the Bahnsen Group and some others noted this week a finding that 30% of the options traded are zero-day expiration options. So these are the options that are being traded here lately. Now let me interpret this financial ease. Options, so let's start with options. Options are a contract to buy or sell a given stock at a certain price at a certain date in the future. These can be used shrewdly and carefully by experts to hedge risk, to sometimes generate some income by selling options. And there are ways that they can be done wisely and used as an effective investor tool. However, they are particularly susceptible to fueling a gambling-like mentality and really functioning like gambling if done improperly. Not only that, but they are also extremely tricky, even very dangerous financially, if you aren't an expert and you aren't able to devote a considerable amount of time and attention to managing them correctly. Sites like Robinhood have made options trading very accessible. However, it's so easy to get confused with options that many people have gotten themselves into serious trouble. In 2021, CBS detailed the tragic story of a 20-year-old man who took his own life because it appeared that he owed $750,000 on his options trading account, with a very modest stake compared to that amount, by the way. It wasn't like he was independently wealthy multimillionaire placing huge options stakes. This is the danger that might happen because when you are playing with options, things can go sideways really fast. Now, what does zero-day expiration mean? It means that the option being traded is for the price at the end of that day, the day that you place that option bet. This is essentially a bet on market movement in a single day. Now, when you combine the fact that 30% of the options trading is this extremely short-term, almost instant rush trading, with the fact that over June, the daily average options trading in June was $6.8 billion. This is nearly 100% increase over the historical average. It becomes clear that this is indicative of a much larger problem. This larger problem is rampant access to gambling that is ensnaring and ruining countless lives with gambling addictions. If you've been watching the World Cup like I have, you would know how many of the ads are for online sports betting. This is true across all sports advertising. When I traveled from PA to North Carolina for the 4th of July, it seemed like there was almost a casino on every exit. While the proliferation of casinos is new, I think the bigger snare is the online access. Online gambling has been, for gambling addiction, what the internet did for porn addiction. It made it exceedingly private, accessible, and easy for anyone at any time to stumble into a devastating addiction. Now, with that context, I think it's tragically easy to connect the dots as to why there's an unprecedented surge in options trading, period, but especially this 0-day instant rush trading. I know that the odds are that many of you watching this at least know someone who has a gambling addiction, and it is a terrible affliction. As a Christian, now, how should we approach this issue? When gambling was legalized in Pennsylvania some years ago, it sparked a debate around the permissibility of a Christian engaging in gambling at all. Now, the historic position of Christendom, particularly Christians in the United States, but also throughout most of the Christian West, gambling was generally frowned upon or discouraged, with many areas making gambling businesses expressly illegal. Some pushed back on this by saying, with the correct observation, that gambling is not expressly forbidden in Scripture. And this is true. However, gambling does feed and usually lives on a love of money, which the Bible, of course, says is the root of all kinds of evil. Proverbs 22:8 cautions us, "Do not move the ancient landmark that your fathers have set." The principle here is that when those who have gone before us have gone to an effort to mark something or set a boundary, we should be very slow and cautious about crossing it or removing that boundary. They probably did not spend their sweat and time just to spoil our fun. Gambling as an industry adds no value beyond a dubious entertainment value to the area that it is involved in or to the community at large. It provides no good or service that enriches the lives of their neighbors. Now, looking forward this week, what to expect? Well, this week is going to be a big week for the earnings reports for Q2 of this year. Particularly of note will be Magnificent Seven's earning reports, so companies like Tesla, Alphabet, and Google. And for these big tech companies especially, it will be very interesting to see how their AI expenditures are affecting them. Now, as we close this week, I want to close with a verse that I think is appropriate in light of what we were talking about with the gambling. 1 Timothy 4:10, "For the love of money is a root of all kinds of evil. It is through this craving that some have wandered away from the faith and pierced themselves through with many pangs." We hope you will have a great week this week. I hope this was helpful and encouraging for you. Please like and share with those you think would find it helpful. And if you are struggling with a gambling addiction, we would encourage you to get it out in the open and reach out to people who can help you. Certainly, we can put a link to the gambling hotline, but I think more importantly, as a Christian, it's important to get accountable to the elders in your church and others who can walk with you in that. Have a great rest of your day, and we'll see you next week.
The topics discussed in this podcast are for general information only and are not intended to provide specific investment advice or recommendations. Investing and investment strategies involve risk, including the potential loss of principal. Past performance is not a guarantee of future results. All information herein is from sources believed reliable, but is not guaranteed for accuracy or completeness. The team assumes no liability for any errors, omissions, or actions taken based on this material. Information is as of the date stated and subject to change without notice. Securities and advisory services offered through Genius Wealth Management. Member FINRA and SIPC.